Okay, ladies and gentlemen, welcome to Macro Ace EIA Inventories Prep with your host Tony. As always, we did have a lot of sentiment news that we were going to go through. Still think we'll go through it anyways, but there was a lot of headlines earlier on in the day and also yesterday as well could make the EIA Inventories release a release that may not see a reaction or a lot of reaction due to the overall sentiment that's moving the markets, or oil markets at the moment. But nonetheless, let's still go through it. So EIA inventories then. So what is it? So it represents the weekly change in crude, gas, and distillate inventories. So it mainly affects transportation. It also affects consumer prices for a number of goods as well. So a lot of consumer goods are made using oil and petroleum jelly, your plastics, those sort of items as well. Also retail fuel as well that people use and consumers use. And then we're also thinking about to heat your houses as well. So there are also those fuels that are also affected by the EIA inventories data, or that can also show how much demand that there is for EI or for inventories for gasoline, crude, and distillate. So why is it a release to watch? Well, it can be very volatile. Sometimes we can get, we have seen before the onset of the Ukraine conflict, we had seen sometimes we've seen up to a movement of $2 or about 200 ticks. But at the moment, we've seen around about 130 ticks or $1.30 moves from the EI inventories release. When sentiment hasn't been too strong. And when sentiment has been quite strong and overwhelming, you more or less get a lot of whipsaw reaction from the market, or you might not get a reaction at all. But again, it can be a very volatile trade from historically what we've seen in the past. So how does it affect the markets? So the key thing everyone's got to understand is that where more oil is added or where there's a build in inventories, it's negative for oil. Usually, of course, when demand is low, oil prices tend to go lower, and if more oil is added, then when demand is low, that dampens oil prices. But on the flip side, when less oil is added, or when there's a draw in inventories, it's more positive for oil. When there's an increase in demand and there is less oil being produced, that will drive up the price of oil instead. So two key fundamental things you just need to understand. And when there's a build, it's negative for oil, and when there is a draw, it's more positive for oil generally. So the triggers then, so according to economists, so they see a crude, so the actual figures, what the high estimate, when we're talking about it here, the high estimate, there's looking for a figure of 2.5 million with a low estimate of minus 4 million. I think that's going to change a lot today. Seeing as how the markets have been the crude oil market's been very volatile today and also yesterday. Gasoline, they're seeing a high estimate of 1.9 million with a low of minus 3 million. A distillate with a high of 2.3 million and then a low of 3 million. So for also, one thing I also want to go through as well is the API data that we had received yesterday. Now, API data is used as a way, it can be used as a way to kind of predict what the following day's data from the government could be, or which direction, should I say, the inventories data could go in. And although it is private data, as said, traders do trade it. Recently, there hasn't been too much of a reaction from the release itself. It's been more or less dead, to put it in that way. But it has in the past had a reaction, and it is used by traders as a way to gauge what the following day's data is going to be. But there isn't a strong correlation. It doesn't mean that when API data shows a build overall, that crude oil, the EIA inventories data is going to show a build overall. But it has at points shown a correlation where if API data does show, let's say, a draw, then the EIA inventories could also show a draw. So if we're looking at the figures then, so with the crude oil stock change data, we had the data came out as a draw at minus 1.181 million compared to the forecast of minus 0.067 million and the prior of minus 0.69 million. So the economist and markets were looking for a slight build in crude oil stock change data, but actually we got a bigger we actually got a draw, which was bigger than estimated. Distiller stock change actual was 0.858 million with a prior of minus 0.949 million. So there's a build in data there. And gasoline data also showed a build when in its own figure coming out at 0.256 million versus a prior of minus 4.233 million. So that was the API data last night, 4:30 p.m. Eastern time, around that. As said, could it mean that the data today can it be correlated, or will there be a strong correlation? Well, again, as said, it depends really. There can be correlation with the private data and the official data. That's it. You've kind of got to wait until the data does come out to kind of confirm how strong of a correlation was there with the previous data or the data the night before compared to the data on the day it comes out. So if we're looking at the median estimates then that we see for the crude oil inventories data, if I just bring it up for you here on the feed. So there we go. So crude oil inventories with a median estimate of minus 2.1 million. So looking for a draw versus the prior of minus 1.019 million. Gasoline inventories also is on the other side looking for a build to minus 0.1 million compared to the prior of minus 0.482 million. And distillate inventories looking for a draw to 0.75 million compared to the prior of 1.657 million. Okay, so those are your median forecasts then from economists, what they're expecting. Okay. So what's driving sentiment at the moment then? All right, so we have a lot of sentiment to go through. I did kind of go through talking about China and how them coming out of their lockdown after about 2 months in Shanghai, they had seen oil prices rise, and also Brent was heading for a 6th monthly climb, and which would have been its longest winning streak since April 2012. And then you also have the EU that they were looking to, or they have an agreement or a deal to some degree of having an oil ban of Russian oil. So you had President of the EU Council Michel saying the EU has agreed to an embargo on Russian oil exports to the bloc, which also helped keep some upward pressure in crude oil, WTI and Brent. And then you also have Russian oil buys. So this is quite a key thing, I think, regardless of how the markets are reacting. We've got to understand who are the other smaller countries that are more dependent and may not be able to access so readily other areas or other countries for oil. So you have countries such as Hungary, Czechoslovakia, Slovakia, which import in total together about 250,000 barrels a day from the Druzhba oil pipeline. So the issue for them being that, one, of course, if they already have a pipeline that's providing them oil, looking to another area to get oil is going to cost money to change or add any more pipelines to flow to the country, or to try and find other nations to transport that some way to those nations. So for those smaller countries, it's quite for those countries that are more dependent on Russian gas and Russian oil and don't really have the means to try and pay for extra pipelines or other forms of transportation. That makes it more difficult. Hence, we've seen Hungary being the main sticking block or the main sticking point in the discussions when it comes to trying to have or put together an oil embargo against Russian energy and Russian oil. And then once the deal goes through that they're going to put an oil embargo on Russia, then where else does Russia go? So they've got other areas such as China, of course, but that takes about 60 days to transport from the Baltics to China, right? Compared to the European refineries, where it's there. There isn't that much of there isn't really that much waiting time for Russian energy. But in order for Russia to try and diversify its areas where else it can go, it's going to be reliant on its other bigger importers of energy. So not only China, but also India too, that is looking to buy cheap oil. So you have those two countries who are the other, you could say, are the main buyers of Russian energy that Russia is going to be reliant on in the future. So again, with an oil embargo, that did keep some upward pressure in the price of oil. It's just more speculation. We haven't actually finalized a deal in Europe or by the European Union to set an oil embargo. It hasn't gone through. So a lot of the price move that we had seen was speculatory until we actually start to see the effects of higher oil prices with less oil coming from Russia. And then China's COVID, also historically what we'd seen is that when the COVID second lockdown had occurred, you had the oil which dropped from $139 a barrel, and you had Standard Chartered's Horsnell saying that there was a loss about 1.2 million barrels a day in May from COVID, and to add on top of that, China consumed about 16 million barrels per day. So that's the more of their average consumption. So about a loss of 1.2 million barrels is quite significant if we're considering how much oil that they consume per day. But I think just historically, just to understand how that affected the markets, you have that China COVID news. So at the moment, so far for now, of course, news changes rapidly in this volatile environment with geopolitical news. But that's something to just understand, keep in the back of your mind. OPEC. Dun dun dun. So here's where it gets fun. So last night or yesterday, you had a Wall Street Journal citing sources that OPEC members are considering exempting Russia from oil production deal, right? Now, what that meant was that instead of forcing Russia or getting Russia to meet its oil production quota, what instead the Saudis had said is that they, or according to sources, is that the Saudis and other nations could more or less make up for the loss in Russian energy or Russian oil, or maybe even more. So that's one thing to consider as to why the price of oil, or WTI crude oil and crude oil futures, crude oil in general, had tanked. Okay, so that's about 2.7% drop after that news had come out, right? So this big bit of news which had come out, which caused sentiment, or is currently driving sentiment at the moment quite heavily, right? You had seen that weakening there from WTI crude oil. Of course, it's now more or less reversed that today after the OPEC news. But that was the reaction yesterday. So that was one thing that was driving sentiment. And then if we carry on, and then if we're looking at the Saudi Aramco and the Saudis, so saying that I was talking about the aviation, and this is just historically from last week. That again, the key thing is that the Saudis, they said that they didn't have any plans to accelerate its modest output increases, right? So I think just one thing just to note, that they weren't going to increase the oil output. until what happened was, if I just bring up the news today, the OPEC members decided, or according to delegates, they said that they would increase oil output to by 600,000 barrels per day rather than, or 648 barrels per day rather than 432 barrels per day, right? So the news from yesterday was confirmed, right? And the markets, what happened was, and we'll look at the market reaction shortly, but what happened was is that that we'd seen WTI crude oil see a dip and then a move towards the upside after the next candle after the news had come out. So I think the main thing is, and let me bring up the chart for you here so we can kind of get a bit more perspective as to why the price of oil might have jumped afterwards. So we're looking on the 10-minute chart here. So we're going from yesterday, where we had the news around 140, 140. That again, so that there is your drop in the price of drop in WTI crude oil off the WSJ citing sources that the Saudis and OPEC could compensate for Russia. And then we had this big old drop. So we were actually down by about 2.7% on the day before we got this bit of news around here where the OPEC members were looking to actually quite quickly increase their oil production for July and August. So the main reason why oil prices, although fundamentally it would make sense for oil to go down even further with an increase in oil production, I think the sentiment is, and the way the markets have been trading, is that they started to sell off quite a bit when the news had come out yesterday. So in a way, it's more, you could say it was more sell the rumor and buy the news in that way, right? That sounds awkward to say, right? But it's more or less the markets had already reacted, and then you see this movement back towards the upside instead, as we already had this huge old drop. So the market's more or less near enough trying to, well, at that point, try to recuperate its losses from a day earlier. It was still up a little bit by about 0.2% after that big old jump. But in the longer term, yes, crude oil price, what could happen is with an increase in production, crude oil prices could go down because of the increase in production. Some analysts are citing that OPEC is realizing that there's an increase in demand. So that's why they had these more or less surprise the market in a way that they would increase oil production. But one thing to note then, if that was the case, why would you see this initial dip here on the news when it came out, right? And then it will start to reverse. That doesn't seem likely. Think of it like when we get interest rate decisions. The market prices in a certain market prices in a rate decision. You see a little bit of a reaction, and then you see after that first candle was kind of done and dusted, or even on the same candle, the market goes back in the opposite the direction, or tries to recuperate any of its losses that it made maybe the day beforehand. So that's what we've seen here, I think. So again, more so, news has been accepted, it's going to happen, and traders think, yeah, okay, sell a little bit here, and then we'll let the markets, and then we'll kind of buy back up because we're already quite low. So if we're going from yesterday's news, hold on a minute. Okay. Yeah. So if we had got to around here, it's about 2.5%. Okay. Which is again quite a big movement which is a decent move on WTI crude oil. So then again, I think more so it's a reversal of that trade there. Mike is very muffled. I can't hear you clearly. Oh, is that? Can you hear me? Oops. Should have been muffled. Hopefully, it should be okay. Sounds okay to me. I'll keep an eye on it. Let me. From what I can hear, sounds fine. Okay. Just to go back to the presentation then. So let's go through the EI inventories previous release that we had received. Just bring it up here. So about 10 seconds before the release. Okay, so you'd seen a build overall in the market or in the data, and you'd seen this movement towards the downside on WTI crude oil or for that build in data. And then if we kind of move on a little bit later, let's see. Also, I'll get my deviations up too. That'll be quite, give you a bit more context as to why the market would have reacted that way. Bring it up. Okay, so yeah, so if we're looking at the data then. Yeah, so we'd seen so there's about 1 million deviation on the forecast figure or the headline figure. And in total, you're looking at a build of about 2 million or about 2 million of a build overall, combining the data together. So we did see that reaction there towards the downside, but then it did a lot of it was more of a whipsaw reaction. So it didn't last too long. That initial reaction at that time, it was sentiment of China's COVID lockdown and the easing that China was coming out of, or slowly coming out of after that 2-month lockdown. So there was that bit of news that was driving the markets. You also had the potential talks of an oil embargo as well on Russian energy. That was also having an effect. So sentiment was quite strong, and the oil markets were already moving in the right direction. Hence, you didn't see too much of a strong reaction from the data. The actual deviation that we were looking for, I believe, back then was for about, considering we had strong data, was for about 8 million deviation in the headline figure to get a good strong reaction from the release. But we didn't get that. We did get a little bit of movement in the market, but again, it didn't last that long. So that was that was last week's reaction on Wednesday that we had from EI data. So looking at the deviations then, so if I kind of just move forward a little bit, skip ahead. Okay, that's basically that. Yeah. So looking at the deviations then, if we bring it up here, of course, this is representing last week, not 18th of May. So what we've seen, what happened with the data last week, we'd seen about 41 ticks towards the downside and then 22 ticks towards the upside. So there was an initial weakening from WTI crude oil. And then overall, after about 10 minutes, is what the bracket represents, we were 50 ticks down after the release. So I think, again, it was sentiment of a potential oil embargo, maybe not happening. And also with China too. But then the markets, what happened was they kind of just carried on its movement as it was from prior to the release. So we didn't see a strong reaction that held itself. But when we have seen a deviation of at least about 5 million, or if we're looking at the data altogether, if you see that the headline figure or the data overall is showing a build or draw, then you'd expect a stronger reaction which is more sustained from the market rather than a whipsaw reaction that we had that we've seen in the past. But I don't know when sentiment is driving the market. So here, 11th of May, when we had a really big deviation in the headline figure, we did see a little bit of movement towards the downside, but the release didn't matter. Okay, so I think with the way that sentiment has driven the markets beforehand, I think we might not get a reaction today, or really a strong reaction. We could see a similar situation here, where we do get maybe a little bit of movement down or up, depending on which way the data goes, whether it's a build or a draw overall. But I think one thing to note is that generally 8 million deviation in the headline figure, and then you're looking for the other two bits of data and one other bit of data to kind of support that or back that up. Either way, either whether it's a build, if it's a build, you'd expect the market to see a strong downward reaction, or if there's a draw or strong draw in the figure overall, then you expect a strong movement towards the upside. But I think with sentiment today, that might not happen. But again, it's more of a wait and see to see whether or not that does occur today. So we've got less than a minute left. Let's get it up here. We've got about 30 seconds. Okay, let's go to a 1 minute chart. Yeah. Okay, 18 seconds. So again, just clarify, we're looking for, I think we're looking for, with sentiment today, at least 8 million on the headline, 8 million deviation on the headline figure, and the other two bits of data to kind of back that up, or one of the other bits of data to show a really strong build or draw, whichever way the data goes. So okay, so minus 5.086 million, minus 5.086 million, a draw on the forecast of minus 2.1 million. Gasoline inventories minus 0.711 million, minus 0.711 million. That's a draw on the forecast of minus 0.1 million. EIA distillate inventories minus 0.530 million, minus 0.530 million. That's a draw on the forecast of 0.75 million. So an overall draw there in data. Seeing that movement towards the upside on WTI crude oil. Let's do... Actually, let me get up the futures version of this here. That'll be... Actually, the futures version is going to be a little bit hard to see. Okay. Let's go with the CFD version here. So it looks like it had a decent move towards the upside. We'll again, overall, so that in total, you can see that there's about 7 million, 7 million as a draw if we're combining the data overall. The one thing I want to see if it actually sustains its move. What it's showing here on WTI crude oil as about a 99 tick move is what it was showing, or about 99 cents. Okay. So at the moment it looks as though, although sentiment was quite strong, with the market already going up after the OPEC meeting and the Saudi headlines that we had seen, at the moment we did get a decent move there on the first candle off of that draw. And I did say we were looking for at least 8 million of a deviation on the headline figure if sentiment was quite strong. But here we go. So we had a 5. So if we chart this data in, so that's about 3 million deviation there on the crude oil inventories data. Gasoline about 600 million, about 0.6 million, and then distillate, that's about 0.8 around 0.8 million of a deviation there. Just bring that out of the way. There we go. It's easier to see. Okay. So yeah, so the headline figures are about a 2.968 million deviation from the forecast. Gasoline about minus, about minus 0.611 million, and still at about minus 1.28 or minus 1.38 million deviation from the forecast figure. So though we got a smaller deviation than we have seen in the past when sentiment's been quite strong, we did see that a bit of a decent reaction there from WTI crude oil. All right, looks like it is still trying to hold up after it's been about 5 minutes now. We'll see how long that lasts. So just also one thing then with this data that you're seeing on the Financial News website. Of course, on YouTube there is a slight delay. So if you are looking at the release, of course, trying to gain an understanding, that if you also want to see or listen to real-time data, read real-time data, data in real time, and listen to a real-time voice, the best thing to do is to jump onto financialjuice.com, okay, on Financial Juice Pro. So what is Financial Juice Pro? If you haven't come across the service like this before, or live voice and text feed, or Squawk service, well, Squawk service, as I kind of already mentioned, it's a live voice and text service that you get, and we update you with what's going on in the markets, why markets are moving in a certain way, the headlines that are coming out from central bankers or OPEC members that come through, that we show you guys and share with you in one place on the Financial Juice news feed. So you've got the voice here, you've got the economic releases inside here, and of course you have the headlines in the news feed that we have in the center. So I think the reason why you should go to or use a live voice and text feed or Squawk service is because, one, investment banks use a live voice and text feed to manage their risk or to trade economic events. So if you are trading the crude oil inventories data, then there you go. That's one reason as to why, if you're unsure as to why oil might have moved in a certain direction, there you are. The data appears as quickly as possible to the second, and you also get the headline too. And then what we try and do for you guys, if you are still unsure as to why the market might have moved, then we also chart the data for you here, just to show you the correlation between a headline or economic release and the market reaction, right? Now the pro version, okay, if you're signed up to the light version of Financial Juice, The light version of financial juice, you get 10-second ads. You get delay to your, excuse me, not 10-second ads. You get adverts. You get more or less a 10-second delay to the feed, right? So if you have a delayed feed and you have adverts coming out, coming to you, and the releases are also delayed as well, that, okay, it can be useful, but in order to try and capitalize on trades as best as you can, or to manage your risk in a much better way, you need a real-time voice and text service, okay? And that's what Financial Juice provides, right? So what we want to do for you guys is provide you with a 7-day free trial of Financial Juice Pro, okay? Which is there in the link or in the comments section for you to have a look at and have a little play with. Okay, so that's Financial Juice Pro. Again, key thing to understand what's going on in the markets, what is driving sentiment at the moment. So even if I was to kind of scroll down on the feed, see all these feeds here. So the red, or the headlines that are critical, that might be breaking, that are shown here. Usually if there's a breaking, it would appear as a banner on here too. But if I was to, let's just kind of scroll down here, where we had the headline of OPEC is highly likely to agree to an output hike in the range of 600,000 barrels per day in July. Maybe you're unsure as to why crude had just dropped for a little bit and then moved back up. Well, there's your explanation there, and you'll be able to correlate how the market's reacting to fundamental or macro news that there's coming through on the wires. Again, investment banks use a Squawk service to manage their risk and to be able to capitalize on potential events, headlines, and releases. Okay, so again, if you want to keep an eye on that, then that is there for you there. I did put the link in the chat for you. Another thing is, what we have a need to know market risk. So if you want to, instead of like trawling through all of these headlines, you can have a quick skim through here and be able to understand what's kind of moving the markets as well. So that is also, that's on the light version. It's on both versions. So there isn't a delay to that, but of course that's just showing you the most important headlines, or the headlines that you should be aware of and keep an eye out for. What's moved the markets within the last 8 hours or less. All right, so that's Financial Juice Pro. Then, of course, you've seen TickStrike, me using it here. Now, TickStrike, if you're not familiar with what it is, it lets you listen to order flow, right? So if there's a lot of buying going on or selling, as we can kind of see, then it will give you a visual and audio notification to display what's going on in the markets. Of course, I've turned my sound down, as you'll constantly be hearing it go off at the moment. So if you imagine yourself, you're in the trading pit, right? And the guys and gals are ready for the market to open, and they all start shouting, buy, 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 sell, 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 buy, buy this price, sell 20 shares of blah, 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 whatever, right? That sound, or that price action that you see and hear, see, and you probably hear in the trading pit, right? Or in the markets, when there is a lot of buying going on or selling, that's translated here. Okay, this shows you the amount of momentum that there is within that market or asset. Okay, so TickStrike will allow you to listen to and look at the momentum that's going on within the markets for a variety of different assets. Okay, so for futures, of course, you've got your crude, your gold, and you've got your currency futures too. Your ETFs, ETNs, cryptocurrency as well is also another thing that is covered by TickStrike. Other than currencies, which is the main part of it. Also stocks too. There are a lot of stocks that we've added to TickStrike that you can keep an eye out for, and also listen into how much momentum that there is at the moment. But the key thing, the way that a lot of traders that I've seen and have talked about have used TickStrike, is to scalp trade, right? That's the that's one of the ways that traders have, that's a lot of the way that a lot of traders have used tick strike, is to capitalize on the momentum that uh, that an asset or asset class has. And then the other way tick strike is used that I've seen and people have talked about it, and I kind of look at it myself, is to manage risk. So, or to manage risk. When I say that, I mean, if let's say if I bring up tick strike here, actually I can drag it along. Wants to. There we go. All right. So I have my S&P, I have my NQ. Those are the two gauges that I kind of look at. Of course, you can get the Russell as well on here too. But these are the two gauges that I have: the S&P 500 and the Nasdaq. S&P 500 and the Nasdaq 100. Now, if they're both moving in the same direction, I would probably say that at the moment, if there's some selling going on, overall, maybe in the stock market, stocks might be headed downward. That's just an example of one way some people can use it. Let's say maybe all the currencies against the dollar are going up, as we can see here with the euro dollar and GBP USD. Maybe that's showing that there's some dollar weakness that's come through. So you might jump on and try and, maybe sell the dollar, or might buy other currencies against the dollar. Again, there's different ways that people can use tick strike, right? There isn't one method of using it. And the final thing about it is that, of course, I've set my level of sensitivity to level 1. Now, for all of you guys and for everyone who tries it out, you can adjust that level of sensitivity. So when there's a lot of market volatility, okay, you will see when there is market volatility, you'll see tick strike kind of going off here more or less all the time, right? And again, more for scalp trading on the, trying to jump on the short, the small trades here or there, and or if you're looking for a lot of momentum, or a lot of maybe selling or buying going on in the market, then you can set that to all the way to 15, which is the least sensitive. Okay, so only when there is a lot of momentum of selling or buying will that go off for you and actually show you a notification right on the little ticker here, whether it's going up or down. So and of course you can adjust it to however much you want that level to be, all the way to from 1 to 15. Okay, you can adjust the level of sensitivity. So that's tick strike there. There's also a 7-day free trial of that, which is on the link. The link has been posted in the chat for you as well in the comment section. Do have a look at that as well. Of course, if you liked this live stream that I did for you, then don't forget to like and share and subscribe to our channel, and like this video, right? And share with your friends or your other fellow traders who could also find it quite useful if they are looking for more information about understanding economic releases and sentiment that's currently driving the market. But one thing to note is that this deviation chart or deviation document that I have on here is something that is available to our subscribers for Macro Ace, right? So if you're subscribed to our mailing list, you'll be able to have a look at these deviations here. So you can look at the past performance of certain releases and how the markets have reacted to them. So we've got a plethora of different releases that I've covered recently, and I've dotted down how each currency or index has moved, or gold, or bonds, how they've moved as well. There's a lot of detail in there that could be quite useful for someone to try and prepare themselves for their own triggers that they could look for economic releases. So you can sign up to the mailing list, which I have here, which I'll post in the chat as well. Here you are. There's also that too. And then finally, if you like our content and you've been watching our videos for quite a while, don't forget to follow us on Twitter too. Show your love, show your support. So, yeah, that's basically all of it there. That's it from me. WTI crude oil is still up after that release there from WTI from the EI inventories data. I think a lot of it's the upward momentum that we've seen recently. Hence, we've probably seen that the data did show a draw, which I said is more positive for crude oil prices. So that's probably driving this movement here that we can see rather than the figures itself, I think. So I think it's sentiment that's taken over here now. So I think maybe that little area there would have been the release reaction. And now we're just continuing to go up. I think the markets needed something needed a bit of positive news to kind of push it up a little bit. Alrighty, thank you very much for joining me. Hope you enjoyed it. Hope you found it useful. And I will see you tomorrow for non-farm payrolls. Actually, good point. Let me share that link with you. Okay, so that's going to be at 7:45 a.m. Eastern time. I'll be starting that live stream. You can jump on that and listen in, and and get the lowdown of what to expect from non-farm payrolls. All right, goodbye and take care.